When one considers investment, the first thing that might come across the mind is entering that overwhelming world of the stock market. So much movement with charts and numbers making it very confusing. Let's cut it down a notch and try to understand it. Let's say you built a business, but now you need just a bit more money to grow or to get a private jet. Where will you get the money? Well, here is an idea for you. Why don't you break down your company and sell part of it while you keep the majority to stay in charge? That is what the stock market is for. And this process is referred to as an initial public offering or IPO. How much money can you really make though? Let's look at an example. Mark Zuckerberg's little toy, Facebook, went public in 2012 with 337 million shares at $38 per share. Not bad, right? But when he finally came to know that there were so many more people who wanted a piece of his pie, he added another 84 million shares. And then he did what? He sold every single one of them. And he raised $16 billion. He literally became a billionaire in just a few hours. In fact, the stock price went up to $45 on the very first day of trading itself. It seemed like it was doing fine, but it was way too early to celebrate since. By the end of the day, it fell back at 38, and that was just the beginning. The bad news was just getting started. In the next few weeks, the stock crashed to as low as $20, twice smaller than it used to cost. Now to understand what's happening here, we have to get to the roots of the stock market. In the past, the stocks were bought mainly for the dividend. Theoretically, when you buy a stock in a company, you are a part owner. That means that like any other owner, you have a right to the profit of a company. You know what? Congratulations. You bought 10 Facebook stocks in January of 2017. And now you are the owner of Facebook just like Mark. Not kidding. So your company, Facebook, makes $15.934 billion. How much of that belongs to you? In the end, you spend $1,300 buying your 10 stocks. But let's see first how many stocks are there in total. So it turns out there are almost 3 billion of those. I doubt your 10 stocks matters now. Let's be positive though, because if we divide the net income by the number of shares, each stock should earn a little over $5, which is known as EPS. In other words, your 10 stock is supposed to earn you almost $54. Not bad, But that's just hypothetical. In practice, you literally get nothing. The board of directors is going to decide what to do with that money. First of all, it will be filling their pockets and expanding the company. Nobody really cares about your 10 stocks. But you don't have to worry. Last year, Apple distributed $13 billion in dividends, or $2.5 for every stock. Of course, it's not much for a stock that costs $170. But something is always better than nothing. However, today it doesn't really matter how much the company pays as much as the price of the stock. Apple's stockholders had a gain of 33% in just 1 year. That's way above the market's average, from $120 to $160. You indeed must have heard this. Apple is the first company to cross $1 trillion valuation, just because its stock price crossed $200. But what if I told you that until June 2014, Apple's stock price was $645? Does that make it that the company was already valued at more than $3 trillion? This stock market is freaking complicated. Let me explain. There is something like a stock split. Each stock was split into 7 pieces, and the prices decreased proportionally, like $92.7. Technically, nothing changed. But now more people can afford the stock and join the community of Apple investors, as it is now priced at $92 for this stock. Not all companies, however, do that. Some only like to deal with serious people, such as Warren Buffett. His company, Berkshire Hathaway, has never split its stocks. That is why it contains only 1.68 million shares, whereas Apple does with 5 billion. That is why one Buffett stock costs more than $300,000. I guess most of us will never join the Buffett Secret Investor Society. But don't worry, Buffett wouldn't mind taking your money as well. That is why he created Class B shares, which are more affordable, $200. The topic of the stock market never ends, but this video has to. As always, hit subscribe and the bell beside it. Thanks for watching, and I'll see you in the next one.